Our next guest does not usually give many interviews and only speaks when he has a big message. And now he's back saying we are headed towards another financial crisis, and this time it will likely be much worse than 2008. He's a mining legend, one of Canada's most successful people, philanthropist, and also happens to own the best olive oil on the planet. Frank Giustra, chairman of Leagold, joins me now in studio. Frank, it's been way too long. Thank you so much for being with me here today.
Nice to see you again.
Yeah, well, close to 2 years.
2 years.
So that's why I don't kid when I say you don't speak often, but when you do, you usually have a loud message.
I do.
So I got this hint from one of your recent commentaries that I think you think something pretty bad is lurking, pretty bad's going to happen. Why do you think that we're headed into darker times than we saw in 2008?
Well, because I think the world is in uncharted waters right now. We're living in a world with a global debt bubble, and anytime you get debt bubbles of this magnitude that are global, that are fueled by speculation, something's going to happen. And things are overvalued, things are priced, the pricing's not correct because you've had all of this quantitative easing around the world. $25 trillion in the last 10, 15 years has been bought by central banks. It's mispriced everything, and it's fueled not only massive speculation, but a debt bomb that's doubled since the last crisis. I mean, it's insanity.
So when people talk of a recession in 2020, are those the timelines that you think you could see coming?
I think it's starting already, and I think that the powers that be know that it's coming. Global growth is slowing, and we're overdue for a recession. You can't stop recessions; they happen. This has been the longest-running economic recovery in history since the crash, and so you can see that global growth is slowing, and you can see that central banks are starting to ease, including the Fed in the U.S., and it's coming. And when it comes, you have to ask yourself, what might happen that will unravel some of this wild speculation?
So let's bring it home to gold now, because this is really, the space where you made your name. You know gold, precious metals extremely well here. How does gold play a role now?
Well, as you know, I've been writing and speaking about this subject for almost 20 years now, starting in 2001 when I started to write about it. And what I predicted back then has come to fruition. And I started to see it with the Fed's behavior change starting in the late 90s, early 2000s, when Greenspan was running the Fed. And he was basically coming to the rescue at every financial crisis with easy money. And all that managed to do was encourage bad behavior and the beginning of moral hazard. Moral hazard, in my opinion, is like a gateway drug. At first you think it's fine, it's in small amounts, it's okay, but then people start to get reckless. And you've seen it. So here's what I believe is happening. I think we're in the third and final phase of the gold market that started in 2001. And this will be the most explosive phase for gold. So in 2001, when gold was $250 an ounce, it's when I first started writing about this, when we created Wheaton River and Gold Corp.
Right.
We could see the beginnings of the monetary policy change in behavior in monetary policy, and that ramped up and created the financial crisis of 2008. And in 2008, I predicted that we wouldn't have a depression. A lot of people were afraid we were going to go into a depression. I said it's not going to happen because we're going to get all of this printed money. That's going to create a floor on the system, the economic system. We'll pay the price later, but gold's going to run. And as you know, starting in 2009, when I created the second gold mining company, Endeavor, gold began its run up until 2011. Well, this gold market just started, the third phase, and this was really fueled by. And I was waiting for the bell to ring, and the bell rang when everybody stopped raising rates, which actually, you could see that coming, last year. You could never normalize these rates. It was impossible. The arithmetic never worked. Had you normalized rates to their normal 5 or 6%, you would have imploded the whole system. So I always predicted they would only be able to raise rates to a point. And then when they paused, that rang the bell for me. And when they started to drop rates, I predicted this will be the beginning of the next really big run.
So where were you this summer? Obviously, this is when gold broke out. Do you remember that moment when you started seeing it run up? What were you thinking? Were you thinking like, aha, I knew it?
Well, I knew it, but I was, I was thinking finally, because I was a couple of years early in predicting it. I started predicting this in 2016. That's why we created Leagold. I was telling my partners, Neil Woodyer, saying, this is let's do it again, because I'm telling you, we're going to get into they cannot maintain this facade that they're going to normalize rates. It's impossible. It's absolutely impossible. So when it finally did happen, I just said, yeah, well, here we are. I'm not surprised.
Yeah. So when you say the word explosive, let's talk about where you think gold could. And I know you hate making forecasts. I know. Before you say that, yeah. But where could it go?
It's going to blow through 1900. And it's going a lot higher. I just don't know what the number is, and it's going to depend on a lot of things. It's going to depend at the rate which countries around the world are going to compete to devalue their currencies, which is the next phase of after zero interest rates, the Fed is the last holdout, and they're close to zero, and they'll end up at zero before the recession is declared. Then they'll start QE. QE is going to start in Europe this fall. The Fed will follow. It's already been going on in Japan forever. And then you're going to see competitive currency devaluations and possibly currency wars.
So do you agree with how the Fed is handling this? Is this the only...
I think they made their mistake. I think they set the trap for themselves a long, long time ago. And I think it was an inescapable trap. The arithmetic never worked. And again, after the 2008 crisis, they talked about normalizing rates and unwinding the balance sheet. And I said, how are you going to do that? I mean, you will implode the economy, we've seen very fragile, anemic economic recovery. This recovery has been subpar for the last 10 years. Past recoveries, 5 to 7% growth rates. We've been averaging 2.5 for the last 10 years. And it's only been a recovery because of all of that free money. So I don't see an out yet because of the way human behavior works. I just think that we're going to have to see a lot more pain. Eventually, someday, we're going to have to restructure the global monetary system. But that's not going to happen yet.
You think everyone should own gold in their portfolio?
I think it would be reckless. If you're an investor, you would be reckless not to own gold. Some gold, it's insurance. And if you don't have some insurance in your portfolio, you're crazy.
Is it physical? Is it mining stocks? Is it both for you? Is it ETFs?
I think, well, listen, I'm a professional, so obviously I have a different risk profile than some other people might. But the way I look at it, I own the physical. Okay, number one. Number two, I bypass the seniors because I don't see, I find that it's going to be difficult for them to grow, the major gold mining companies. I might as well just own the physical for that part of the ride. And then I like to own or create the intermediate producers, which this is my third one, Leagold. And I'd like to own a lot of those, a lot of shares in those, because that's where the growth is going to come from. And you're going to get both the benefit of the rising gold price and a growing company with growing earnings and growing production. Then I like, and this is where the risk profile changes for a lot of people. And I can't make those recommendations, but I like to own developers. I like to choose own shares in companies that have a deposit that is economically feasible at some gold price and will, in a rising gold price, go into production and get acquired or build its own mining company. So I own some of those, and then very rarely I invest in exploration because it's it's exploration and it's a difficult game. I mean, I have one position, but. For me, that's rare.
So do you think we'll finally start to see the money flowing back into the juniors? There's so much talk of it. Oh, it's all in cannabis now. It's all in the cryptos. When's it coming back to mining?
It's like every cycle that I've seen since 1978, okay? We will have to see a new high on gold, but we're not that far off. The money will come. So
it has to go back to 1900
I think,
in order to have major...
But I think the money flows will definitely come in, and I think you're going to see insanity in that space, much like you've seen insanity in that space before, because there's so much liquidity in the world. And what is there, only 80 gold producers in the world? I mean, that's...
Yeah, and speaking about, you're so look, you're all over it in the mining space, right? You mentioned Leagold. You also are a huge stakeholder in Sandsprings. So, and I've seen you at shows. People are pitching you constantly, okay? So how do you choose when you're going to get involved? What makes you think, okay, is it the people behind it? Is it obviously that the fact that there's rolling gold there?
Most of it is about people. When I'm building, whether it was Goldcorp or Endeavor or now Leagold, it's all about the people. I mean, without Telfer, I talked Telfer into doing this in 2001. I mean, he was really the driving force of actually making it happen. You know, it was my idea, and I kind of put all the people together. We raised the money, but it was his management skills that made that such a success so quickly. Neil Woodyer, the same thing. We did that Endeavor. He's a brilliant mining executive in building mines and making acquisitions, structuring balance sheets. So yeah, so it's for that part of it's people, okay, and then you go through your business plan, you create your gold mining company. So that's one approach to it. Otherwise, it's an asset. If you find Sandspring, I invested in 2014, I think it was, and I thought to myself, gold is going to go back up again. It's not going to sit at 1,100 forever. I've always believed that. So I told my people, find me something that is highly levered to the gold price, that has a great asset, but is out of the money right now. And they came up with Sandspring.
So I want to dig a little deeper about how you would play this market. You mentioned what you like and how you would be diversified. But can you talk a little bit more about how, is it really possible for someone to make substantial amounts of money right now in this mining sector?
Yes. But you have to be careful. Mining is risky, especially junior mining, especially exploration. And it's a tough game. You really, I think all you can do in that business is back management groups that have done it before, that are honest, that don't over-promote, that do it right and have done it right many times before. That's the only, and even there you're taking risk because it's Mother Nature.
Outside of mining, you've been busy. You kind of took a step back from mining for a while, right? It
was quiet. There was nothing going on.
So you were in, philanthropy is a huge.
It's 80% of my life.
80% of your life. This olive oil.
Best olive oil in the world.
You're just involved in just a lot of things. So how do you choose? Do you just do things you love, or?
I'm curious, so I like to always learn new things. I mean, I'm always trying. I've had 4 careers, different things. I love movies. I love television. I love making olive oil. I love cooking. I love my music studio. We create songs. Yes. I love adventures. I do a lot of adventures with my friends where we do crazy stuff, and life is about balance. And so I've figured out, actually I've written about this in my blog, the 5 secrets to a balanced life. And I really believe those things. And you have to have balance. It includes family, includes adventure, includes learning new things all the time, includes giving to others, and being passionate about what you do.
I love how you told me once you like doing things that make you feel alive. Because I think I asked you, I said, Frank, why are you jumping out of planes and going on fighter jets and doing crazy stuff?
It really does keep you alive. And I think there are 2 things that either keep you young or keep you alive. Learning new things, so learning a new subject you knew nothing about, or going on an adventure where you're scaring yourself a bit. You're going, I have to learn this, whether it's jumping out of a plane at whatever height, 30,000 feet, or climbing a mountain. And you have to learn something, and you have to challenge yourself, and it's scary. So you have to scare yourself once in a while.
But now that gold's been making such a huge comeback and offline,
that's what
I was going to say. Has this become your new main focus now, because you feel that there's a lot of room here?
Yeah, much to the delight of people that are working around me. Because for a long time I was saying, God, there's nothing to be done here. Just wait.
Well, when I got the phone call, you said, I'm ready to come back on. I said, oh boy, that means he thinks there's something big going to happen here.
Yeah, and as I was saying to you earlier, this is going to be an explosive gold market. And I know your viewers are all rooting for a higher gold price. Most of them are here because they're invested in gold. But be careful what you wish for, because if things play out the way that I predict they're going to play out, this is going to be a very ugly world to live in. And I see gold as insurance. I think you should own it in every portfolio. It should be your insurance. But I don't relish the world we're going to be in if gold goes to...
But ugly in the sense that our money will be worthless, ugly that we'll be in a recession, people will be out of jobs. What's ugly?
Well, what's ugly is that these things usually lead to either hyperinflation or to some sort of collapse. And with those things comes geopolitical conflicts and, social conflict, massive unemployment, lots of crazy. I mean, just look at what I suggest people. I don't want to be a Debbie Downer here because I'm here to talk about gold, but I think a lot of people should dust off some history books and really look at what's happened in the past when this sort of thing takes place. It's not pretty.
Would you still be in the crypto space now?
Crypto was interesting. I don't think it's going away, but I would rather be in gold. And I have this debate with crypto players and gold players all the time, and and I've heard all the arguments. Gold is physical. You can't hack it.
It's not a pet rock to you, as some people have told me.
It's a currency. It's a currency, always has been. And look at the way the central banks are buying it. It's a currency, and you can't deny that. The crypto world, I'm always worried that in an environment where a cryptocurrency challenges a sovereign currency in any dangerous way, I think they'll take them out.
And Frank, I got to ask you about silver. I'm going to get a lot of emails saying, why didn't you ask him about silver?
Well, silver will go for the ride and will tag alongside of gold, and at some point it will outperform gold, as it always does. It's more volatile than gold, but it will track gold. If someday gold pulls back, silver will pull back even more. I've been watching this since 1978 when I got into this business, and silver is a classic. It will at some point outperform.
And what about U.S. equities? Do you buy the big stocks? Are you in Apple?
Absolutely not.
Wow.
We're way overdue for a correction. If you think, this market has almost doubled since the crash, and it's up 300% from pre-crash lows. From the crash lows, up 300% and doubled from the pre-crash highs. It's only being fueled by massive amounts of free money. The market's overextended. I don't know, did you see that piece that Ray Dalio put out about a paradigm shift? He nailed it. He nailed what's happened. It's basically people, the market behaves in a certain way for a long period of time. Things get popular, people get overextended, and then they get hurt. And this has been a long, long run. And I think there are two things. Moral hazard is basically out of control on all this stuff, because there are two things that people have been conditioned to believe. Buy on dips, so every time that there's a correction or a crash, you buy because you will make money. I remember this going back to 1987 when the market crashed. The argument goes back to then that, oh, sure, but a year later, you could have made a lot of money. And post-2008 crash, same thing. Yeah, you hang in there because the market will rebound very shortly. So we've been conditioned that always buy on dips or on corrections, and that the Fed will always come to the rescue. And what people forget is that there were long periods, bear markets. The 1969 bear market lasted until 1982, 13 years. The 1929 bear market, so it lasted for almost a decade. People forget that I think we're overdue for a bear market, and a 30% correction in a recession, in a bear market recession, is a laydown.
Yeah, no,
30 is easy. It could be a lot more, and it can stay low for a very long time with very flat movement for many years, where people are just not interested anymore.
No, I'm interested to learn that you're not exposed to these.
I don't own a single share. No, I think it's overpriced, it's overvalued, and it's been running too long. This is the longest running bull market in history, and it's fueled by cheap money. There's no other reason. There's no reason for that type of growth in the market.
Well, I guess people have this fear of missing out. They're like, I got to be in Tesla. I got to be in Square. I'm going to miss this.
And that's what Ray Dalio is talking about. People have become accustomed to a type of behavior because it's been going on so long, and they think it will never end. It will go on forever.
Fascinating.
And it's not. This market's going to have a correction. We're going to go into a recession. Something will happen, and you're going to have. And there will be a time to buy the stock market, absolutely. But I wouldn't buy it now.
All right. Frank Giustra, I always appreciate when you take the time, because I know your time is limited, so I appreciate you coming to New York and sitting down with me. Your favorite recipe to make with this award-winning olive oil?
It's a new, oh, thank you for asking. I make this, it's a great, I actually wrote an article. If you go to frankgiustra.com, which is my blog, I write about everything. And I wrote an article about a pesto sauce made with the leaves from the rabi broccoli with roasted peppers, using that olive oil to make the pesto. To die for.
Wow, cooking show is coming though. We're going to do that. We're going to do that. And I could vouch, this is incredible olive oil. Thank you so much, Frank Giustra. Thank you for coming, and thank you for watching. We will have much more for you on Kitco.com, so be sure to stay tuned. Thank you.